So will the housing market impact the whole economy and all Americans, as Secretary Paulson seems to be warning? We're joined by Charles Payne of WStreet.com, Peter Schiff, president of Euro Pacific Capital, and Pat Powell from Powell Financial Group. We got a real A-team here. Peter Schiff, first I think the most frightening thing that Paulson has said today is that the mortgage mess is not just limited to subprimes. He's looking at foreclosures all across the range there.
Of course not. No, it's not just people with bad credit that borrowed money they couldn't afford to repay. You know, everybody who took out an ARM, particularly in the high-priced markets, even the prime borrowers cannot afford the resets. But you know what? It's not going to be just limited to mortgages. Ultimately, this credit crunch is going to extend to all facets of consumer borrowing. It's going to be hard for Americans to borrow money to buy cars, to use their credit cards. And what the government is doing now, what Ben Bernanke is doing, is making this worse. Because by cutting interest rates and letting the dollar fall through the floor, he's basically telling our foreign creditors, who are the ones that are lending us all this money and making mortgages possible in the first place, we're telling them, you're not going to get paid back. The dollar's a bottomless pit. And this is only adding to our problems. If you want to know why oil is $87 a barrel, it's because Ben Bernanke irresponsibly cut interest rates.
All right, but Charles, is the situation really that dire? Yes, in his speech earlier in the day, Paulson talked about the significant risk to the economy of the housing slowdown. But then when I interviewed him, he pointed out that the global economy is strong, and although housing's a risk, that the economy is still okay.
He's taking great pains also to tell us that this is a diversified economy. Our economy is not only the housing market. And, you know, so I obviously totally disagree with Peter. Of course it's a risk. You know, this is sort of an unprecedented point that we have. But you know what? It's not atypical either after the type of run-up that we saw in home prices. Again, if someone had a home that was worth $300,000 6 years ago, ballooned to $700,000 and pulls back to $600,000 or even $500,000, that's about right in terms of how a house should appreciate over a long term. Now, of course, there are some problems that are associated with this. We all know that. We know that there are going to have to be some dramatic things on all fronts, from the lenders, borrowers, and even more from the federal government.
But, Pat, the economy, of course, is more than just housing. But most for most Americans, the house is the main part of their wealth. So it is extremely important in household wealth.
Yeah, absolutely. And when you're talking about the individual, they're really concerned. It's that those people who are at the margin, the people who are not quite sure if they're going to be able to make the next mortgage payment, for them, this is a tragedy. For most people who are going to make their mortgage payments, this is not such a big deal.
The overwhelming majority.
The overwhelming majority. But if I can, the guy who can't make it, and I think Paulson alluded to this or even said it in your interview, that the guy who can't make that mortgage payment, instead of just sitting there and letting things collapse around him, needs to take charge. What he needs to do is he needs to call up his banker, and he needs to say, I need to talk to your loan workout group. There are solutions.
They don't want you to go bankrupt. They don't want us.
And that's something Paulson, Secretary Paulson, talked about, that the government is working with these mortgage service companies to make sure that if somebody can make the payments, that they work with them and keep them in their homes.
Well, look, of course they're going to work with them. They don't want to foreclose, but the lenders are going to lose a lot of money. They loaned money to people who can't pay it back. But, you know, in Charles's example, where the guy's house goes from $300,000 to $700,000, the problem is last year he refinanced it, and now he has a $650,000 mortgage. So now when the house is only worth $500,000, it's a big deal, especially when he used an ARM, and now the mortgage payment's about to reset, and he can't afford it.
Listen, I got to tell you, this is drastic when we hear about all our fellow Americans who are, you know, in this particular predicament, but it is a drop in the bucket of overall home ownership.
No, it's not.
Yes, it is.
No,
what percentage is it, Peter? What percentage? 5%, 3%? What is it? And here's the bottom line. I do agree with Peter in the sense that it's going to be across the board in terms of the pay. And I think that's where the federal government needs to step in. And Fannie Mae, Freddie Mac, they have to buy more expensive loans. You can't keep the threshold of $417,000. Call it a temporary thing if you want, but bring it to $600,000.
Charles, you opposed to that at first when you first heard about it?
Initially, but I think it's the right thing to do at this time. And again, it's not necessarily a bailout, but it's a smart and right thing to do at this time.
Guys, we'll